Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about USDCHF. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders on the CHF. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong monthly support and demand area. From here, in fact, all this previous rejection to the upside was created. Again, here the market tested its zone and rejected it to the upside. At the moment, we can see how the market just started testing once again the exact same zone, from which there is the possibility to see a potential rejection to the upside to be created, as already happened in the past when the market tested this exact same level. So from a monthly standpoint, everything seems quite bullish. Now let's drop down on the weekly time frame and see what we have. Well, from a weekly perspective, we can notice how so far the market has been behaving as you would expect in a perfect uptrend, in which the market just continues creating higher highs and higher lows. Now, when you have an uptrend, that is what you would usually expect, right? Every time the market to create a new higher high and every time the market to create a new higher low. Now, in this specific case, we already had 3 higher highs and we already had 2 higher lows. Now, in this case, if this is a new higher low, we would need to see here now the new higher high to be created, as you would usually expect when you're having the development of an uptrend. So in a situation like this, what we could expect is to see more potential bullish price action for the market to go and print a new weekly higher high. Dropping down on the daily time frame, what do we see? Well, from a daily perspective, we can notice how we just had the break of structure of a quite important level, which is this one here. This zone, in fact, was already acting as previous resistance here, turned support here, here, and here. The market then broke it to the downside, and that previous support was turned resistance here and here. Now, the market has broken back above the zone. So this previous resistance is now turned support, and we could expect a potential test of this previous resistance turned support and then a potential rejection to the upside away from this level. We can also notice that from a pattern standpoint, as I said many times, after an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a perfect 0.32 Fibonacci retracement lining up exactly inside of this horizontal level of structural support. Now, what this creates is confluence of support because we have 2 important structure levels lining up in the same area of price, therefore creating confluence of support exactly in this zone. So this means that if the market will go and correct to this area, at that point, there is a quite high probability that you would see institutional longing inside of a confluence of support zone. Now, what do I mean when I say institutional longing? Well, that is what I refer to when I'm looking at the commitment of traders and I see institutions that are moving to one particular side of a pair. Now, if we look at the data precisely for the CHF, if we're looking at the CHF, we have to keep in mind that already we're looking at CHF USD because all currencies on the spot are traded against the USD. So if we're looking at the data for the CHF, which is CHF USD, what we can notice is that in the long run, we went from having minus 3.4k net positions all the way down to minus 41.1k net positions, meaning that in the long run, institutions have been moving to the bearish side of the CHF. meaning to the bullish side of USDCHF, because since every currency on the spot is traded against the USD, if institutions are shorting the CHF, they're actually longing USDCHF. And we can see how in the long run, in fact, they have increased their shorts on the CHF from 11.8K up to 47.7K shorts, and longs have been decreased from the high here at 21.2K all the way down to 6.6K. So at the moment, institutions are positioned with 47.7K shorts compared to only 6.6K longs on the CHF, meaning that they are currently sitting with 47.7K longs on USDCHF and only 6.6K shorts on USDCHF. Therefore, they are positioned aggressively to the bullish side for USDCHF, making it stronger. Now, let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. Well, in a situation like this, if the market will correct to this support zone, there is a high probability from here to see a potential rejection to the upside away from this area, because since this is a confluence of support area, there is a probability to see institutional longing inside of this zone, which at that point would further increase the probabilities of a potential push higher away from the level. So if the market will correct to this zone, what would I expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see a potential push higher, completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it.
If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.